Good morning and welcome to Trading Hour. I am Reema Tendulkar and with me is Sonia Shenoy. Hi Sonia, things are looking up for the markets, right? We're up close to about 150 points on the Nifty. The Sensex has surged more than 500 points. And now we're only talking about when we're going to scale those all-time high levels of more than 18,350. But today there is considerable strength coming in from the rest of the Asian markets. So pull up the strength coming through from Asia, where your markets in Hang Seng up close to about 3.5%. But even the others, the Taiwanese, the Korean, Straits, the Chinese markets too, after the surprise increase in the Kaizen manufacturing PMI, it's still in contraction zone, but there is a significant increase on a month-on-month basis, and that's fueled the positive surprise coming through on Shanghai as well. And since I think you're also looking at that 52-week high, I was doing a quick check. The last time the Nifty was at the 52-week high level was in January of 2022. And from that level, if you map the stocks which have contributed to the up move, it's Adani Enterprise. So I think we can pull up that chart. Adani Enterprise has been one big mover. Apart from that, ITC from Jan to now has been up close to about 50-odd%. And a couple of the other big movers will also, let's get that table up on our screen. That's the high level. ITC, Coal India, these are some of the big movers that we've seen from the 52-week high level. In the banking pack, Axis Bank, in the auto, M&M, Eicher Motors, both of them have moved up nearly 40-50% from the January levels. On the losing side, it's the IT. IT has been struggling. So names like Wipro, Tech Mahindra, TCS are down compared to those January high levels, and quite significantly, a couple of these oil and gas names like BPCL and ONGC, and Hindalco too has struggled. It's 52-week high. From its 52-week high, from its level that it was on 18th Jan, it's down about 17%.
Absolutely. But you know what? It's like been a fabulous Diwali and now an early Christmas, right? For traders, for investors. So great going for the markets and new highs in sight. Welcome back, Reema. Last week as well, 3 days running, there's been large foreign investor buying as well, right? So, the huge figures, what we saw yesterday, but even if you put it together, 8,500 crores in just 3 trading sessions. So India is standing tall, and whichever way you slice it, right, things have been looking good on the macro front as well. Earnings season has gotten off to a fabulous start, mostly whether it's financials, whether it's capital goods, largely with IT as well, earnings have been good. But all eyes will now be on the Fed's policy decision tomorrow. I think by and large that 75 basis points interest rate hike has been priced in. So, in that context, if that comes through, it won't be a negative surprise, at least for our own markets. But let's see which way things go. For now, the bulls have tightened their grip a little more on this market, and it's just a matter of when and not if this market hits all-time highs. So even the banks, right? They have played a big part in this rally that we're seeing. In fact, the bank Nifty, as we speak, is also very close to its all-time high. So let's tell you what's on the show this morning. It's an action-packed day. Strong session of trade. The Nifty is comfortably above the 18,100 mark, led by pharma stocks and PSU banks. Mid-caps are relative underperformers. We'll discuss the road ahead for the market with Sunny Agarwal of SBI Securities.
L&T and Tata Steel are among the top index losers following their quarterly numbers, earnings fine print, and highlights of the management commentary coming up on the show.
And the auto sales numbers for the month of October are trickling in. Latest updates coming up on the show.
Fino Payments Bank in focus on the back of a good Q2. Rishi Gupta, the MD and CEO of the company, will join in just a bit.
And Axis Bank is losing in trade. 4.1 crore shares worth over 3,600 crores have changed hands in a large block deal. Details coming up on the show.
In big earnings to track for the day, we'll get you the key expectations from Sun Pharma, Tech Mahindra and Adani Ports. All this and much more in the next 60 minutes. But let's invite the first corporate then on Trading Hour on that note. Fino Payments Bank is on our radar. The company reported a good set of Q2 numbers with over a 35% growth in the net profit on a quarter-on-quarter basis. The total income has seen a growth of 5% sequentially. The stock has gained close to about 3.5% in early trade, reacting to the numbers. We're now joined by Rishi Gupta, MD and CEO of Fino Payments Bank. Rishi, morning, and thanks so much for joining in. The last time we spoke, you indicated H1 is going to be strong for the company. Could you give us a sense of how H2 is going to be? What are the growth rates that you are looking at, the customer addition, the growth in your own channel as well as third party? Give us some numbers for the second half.
Good morning to you. and to your viewers. The quarter two has been good, as we mentioned in the last call. We believe H2 will be stronger than quarter two also. We expect the numbers to grow from here. We expect our API business, which is at about 34% right now, to remain around the same level. It has gone down from 36 to 34. Our own business has gone up from 62% to 64%. So that's a good move. Our operating leverage or operating cost has also come down from 30% to 25% if I look at an year-on-year basis. We expect a good quarter H2 from here. Our customer ownership has gone up to 7.5 lakh accounts and now contributes 18% of the overall revenue for us. We expect the numbers to grow further from here. This has been a substantial jump on customer ownership from 6.2 lakhs to 7.5 lakhs in this quarter. We expect the strategy which the company adopted, building up the transaction business, and on top of it, adding the ownership over the last couple of years, that has started to give good results. We expect the momentum to continue. Our CMS business, which is a large distribution network which we have created, we are seeing nearly 161 corporates now using our payment infrastructure, which is there. That number itself has grown by 92% on a year-on-year basis and now contributes 8%. Looking at the growth, both on the transaction business, the ownership business, we expect a good H2. We expect the margins to further go up, our net profit margins to further go up in H2 as well.
Okay, so this is interesting. You're saying that the customer ownership has gone up and now you have about 7.6 lakh accounts. The last time we had spoke to you, you had also said that repeat customers on digital transactions have gone up. Now it's at around 65%. Just take us through what is the trend. Are you seeing more of repeat customers? If yes, what kind of growth do you see in customer ownership itself? I mean, you said that the numbers will move up, but any kind of targets that you would have for the full year?
Yeah, so in H2, in quarter two, we did 7.5 lakh accounts for the quarter. So in total, we have 60 lakh accounts as such. Nearly 40% of those accounts are now transacting on the digital ecosystem, and digital now contributes 17% of our overall throughput, which was about in the single-digit number if I look at a year-on-year basis. We expect the customer ownership number to move up from 7.5 lakhs in quarter two to a higher number in H2 on an average basis. We also expect the digital throughput, which is nearly more than 10,000 crores on a quarter, to further go up as people are using UPI and other handles to build on the digital ecosystem. Fino also has launched its Fino payments, Fino Pay app, and that app is also now gaining more ground. So both in terms of ownership as well as digital throughput, we should see a growth as such. On a number basis, I can't give you exact numbers, but we should see a good growth in both the numbers in H2 as well, which should lead to a higher revenue as well as a higher PAT margins.
Your PAT margins are 4.5%, I think, in Q2. How much could it increase to, and what will be the driver?
So on the guidance side, on PAT margin, we should be above 6% in quarter four, is what our target is.
And the drivers?
And the drivers for that, obviously, is the ownership strategy, which is there. Normally, our H2 is more than H1. It's somewhere H1 is about 45 to 47% of the overall revenue for the year. So we expect a strong H2 on basis of that. The ownership as well as the transaction volumes and the growth we have seen in the month of October gives us the confidence that quarter three and quarter four should be good for us as we move forward in the two quarters.
You did mention to us that the customer ownership will move up further and the number of customers, but are you also seeing an average ticket size increase, especially in the rural markets? Because you had indicated to us the last time around that rural penetration for you is growing, and I'm sure there's a big untapped market over there. Just trying to understand, because payments as the payment platforms, that scope is improving quite a bit, especially in the rural markets. So just trying to understand over the next 1 to 2 years, will the average ticket size go up in certain products? Has it already? And what about rural penetration for you?
So on the rural penetration, we are already at 94% covered on the districts. Having said that, we believe there is enough and more penetration which we can do on the distribution level. We have 12.2 lakh merchants. Our target is to reach 20 lakh merchants in the next 2 to 3 years. So both rural penetration will go up, and you should see sizable numbers coming up in the next couple of years on that. On the spends, particularly, we have seen there is a roughly a 10% jump on the debit card average transaction spend vis-a-vis last year. And we expect that number should be more or less at the same levels. On the cash withdrawal businesses, the numbers are more or less at the range of about 28 to 3,000 rupees per transactions. Our CMS per transaction throughput has gone up substantially as we are adding more industries into the CMS business per se. In fact, you had asked me in terms of what is the CASA renewal percentage as such. So we have seen a 1.5x growth on our CASA renewal income on a Y-on-Y basis. So both that annuity income which we are getting on the CASA as well as the new accounts which we are adding is substantially adding to our margins because these are high margin, high growth products for Fino.
Just one more. Can you give us an indication of what the sustainable customer account increase could be? Current quarter is 7.5 lakh. What could that number be on a sustainable basis going ahead, according to you?
So on an average, we are adding about 2.5 lakh accounts per month from nearly 1.25 to 1.5. If I look at from the last year, our expectation is somewhere between 3 to 3.5 lakh accounts would be a sustainable number if we go forward into the next year, which is FY24.
Okay, all the best. Thanks a lot for joining in and have a great second half of the year. That's Fino Payments Bank, up almost about 3% right now. Just wanted to mention, a lot of banks are now hitting fresh 52-week highs. So there's Bank of Baroda, Union Bank, Canara Bank, Indian Bank, Karur Vysya, the whole lot is sitting at fresh 52-week highs. So don't lose sight of the Bank Nifty. Big move is what is taking place over there. We'll do one thing. We'll take a quick commercial break on Trading Hour. But when we come back, Manisha Gupta will be joining in to give us a quick update on all that's happening in the world. Well, thanks for staying with us on Trading Hour on CNBC-TV18. For now, we're discussing a lot of the buzzing stocks. In case you missed out on them, some of these auto companies are in focus after reporting their sales numbers for the month of October. The ones that have come out first up is Bajaj Auto. Now, the numbers are looking weak. There's no other way to slice it. It's because of the fall in exports that the overall numbers were dragged down. Total sales down 10% for Bajaj Auto and exports are down 31%. Both two-wheeler and commercial vehicle exports have been under pressure, while domestic sales have looked pretty good, up about 11%. Now, the management, when we spoke to them, said it will take a couple of more quarters before normalcy returns in the export market. So they don't have any clarity on that. But they say that exports are improving compared to what we saw in the preceding few months. The shipments, though, are running behind retail at the moment. And I think what the street likes today is the fact that the domestic market is improving. So they do say that they had a robust festive season this time around in domestic retails. The upper half, 50% of the industry, is growing at twice the rate. So the premium end of the market is looking very good, and that's something and we know has taken place. And the three-wheeler electric vehicle, which is the much anticipated launch from Bajaj Auto, will happen in March of 2023. Let's move on to Escorts Kubota. Now, over there, the numbers have looked very good. It's a strong volume growth, 7.5% year-on-year, 18% month-on-month. Domestic sales are looking good. And the company commentary is very positive. They say festive demand was good, led by above-normal monsoon and high water reservoir levels. And for the coming Rabi season, all macroeconomic factors remain quite favorable. The only overhang really is the unabsorbed commodity inflation that remains a concern. So just take a look at the trajectory of sales. From a low of 5,300 units in July, it's come all the way up to about 15,000 in the month of October. Then why is the stock falling? That's purely because it's profit-taking. The stock has had a very good run-up and now money is being taken off the table. So that's the list of numbers that have come out so far, awaiting the other the sales.
All right. In the meanwhile, then, let's take stock of the market technicals. Mitesh Thakur of earningswave.com joins us for a technical check on the markets. Mitesh, morning. Not really given any investor or trader to enter into the market after the gap up opening. Things have been fairly steady so far. What's the trading approach right now as we speak?
So, morning, Rima. I think the good thing is that we cleared the earlier height, which was on the 13th of September. We got a high of around 18,090, 18,088, and we cleared that with a gap and we are sustaining. So I think now traders can look to trail their stop loss about this level or just 10 points below it. 18,075 is what I recommend. And I think, we are now also just marginally above the trend line, which if you join all the highs which the index has made on the weekly chart for the last 1 year, about 4 or 5 of them, We are now trading above that. So I think this looks like a breakout. The first pivot is at about 18,250, but the logical targets would be somewhere in the range of about 18,380 to begin with, but 18,670, the all-time high could be 18,604, the all-time high could be revisited. So my sense is that I think, prepare for further upsides happening over here. This is clearly a market which is trading with positive bias, and there's good sectoral rotation happening as well. So stay long and just trade your stop loss about 18,075.
Okay. On individual stocks, I wanted your thoughts. I mean, what are the stocks, of course, that you're looking at? But also any of these names that you trade for a pop, some of these platform companies, whether it's Nykaa, delivery. I know it's very, very volatile, so you could burn your fingers both ways. But Mitesh, your thoughts here?
So, Sonia, I think delivery is something, which has caught my attention purely because of the fact that it is bouncing back from extremely oversold levels. So a trade can be taken. The risk reward entry point is slightly better placed. Nykaa had a rally yesterday, so now entering may not be a good idea. Delivery, I think, keeping a stop at about 365, we can still look for this bounce back to possibly extend about levels of 410, 415 on the upside. But that apart, the Nifty Pharma index, which is on my radar today, is making a fresh high with good breakout taking place on most of the charts. So I have two buys over there. Glenmark is a buy with a stop at about 408 for targets of 425, and Cipla is a buy as well. Keep a stop at about levels of 1163 here and look for targets of around 1210.
Thank you very much for that. Get into a break. On the other side, a whole host of stocks are buzzing in trade. So more details on that on the other side. Welcome back. Let's talk about some earnings reaction. L&T is the first stock on our radar. It's a good set of Q2 earnings. The order inflow is robust. The management has reiterated the order inflow guidance of 12 to 15% for the full year. The stock is now recovering from the day's low and is right now absolutely flat. Vivek is here with more details. Vivek?
That's right. In fact, the company has reiterated the order inflow guidance of 12 to 15%, and most likely the management has indicated that it would be at the upper end of the band where they would settle at the end of FY23. Now, we spoke to the management, and some of the key takeaways in terms of what exactly the management has highlighted to us in our conversation. One of the worries as far as these results were concerned was the softness as far as the core EPC margins were concerned. Management indicated that commodity prices were a bit of a negative surprise. In fact, they were targeting around a 9.5% margin band at the start of the year. That is something that the management has indicated might be a little tough to achieve. Still, they are on track given the fact that commodity price environment at this point of time is quite soft. However, they believe that FY24 onwards, margins will see a significant rebound. They also spoke about the road assets, on track for the targeted divestment. This quarter, Q3, is when they expect to go ahead and sign an agreement with a buyer. They've already identified a buyer, is what we understand. They expect this divestment to happen at the end of FY23 and maybe a month or so delayed because of the multiple approvals that will be required. Talking about the Hyderabad Metro, some progress in terms of ridership trends, some progress in terms of being able to reduce debt quite significantly. However, divestment may be pushed out a year or two is what the management indicated to us. Very importantly, in terms of ROE, on the back of multiple divestments that will happen and also on the back of targeted improvement in the cash flow, they expect ROE annual increase of around 1 to 1.5%, and that is something that's quite important to track as far as L&T is concerned. Brokerages continue to remain bullish. Macquarie did highlight that the margin declined from elevated commodity prices and project mix not being very robust this particular quarter, and also the one-off project closures is something that impacted the margins this time around. CLSA continues to believe margin visibility will improve from fourth quarter of FY23, and HSBC is saying that the divestment of ROE dilutive businesses like road concessions as well as thermal power is something that going forward will improve the ROE.
Okay, thanks a lot for that. Well, Tata Steel is the other heavyweight that's losing in trade. It was a disappointing set of numbers that came through from Tata Steel. Nigel is here to give us the latest on that. Nigel, over to you.
Well, that's right. It was a disappointing set of numbers coming in from Tata Steel. The consolidated EBITDA number did miss our estimates and the margins as well. Now, two big factors played out. One was steel prices were weaker. The second factor was they didn't get any benefit of lower coking coal costs. So both those two resulted in a miss on the operational front. For the India operations, we were working with the margin number EBITDA per ton of around 10 to around 11,000 rupees per ton. It came out around 8,800 rupees per ton, and you'll see a declining line if you compare it on a year-on-year basis as well as on a Q-on-Q basis. Moving to the European business, more or less in line. We are working with a number of around $110 odd. It came in at around $115 per ton. And, in rupee terms, is a little less than 10,000 rupees. The other factor that played out was that the net debt went up by close to around 17,000 crores odd. That's because of three big factors: NINL acquisition, capex, as well as they did pay out some dividend. Now, CLSA, they are cautious on the company because they've gone ahead and downgraded the stock. They've cut the target price as well. And the key reason is they're expecting profitability to decline from now on. So they've cut their estimates by close to around 18 to around 20%. On India business, they say margins will recover. However, the risk is that prices could be under pressure in India because imported steel prices are a little bit cheaper in comparison to domestic prices. On Europe, they see a big risk out there because spreads will contract and also the contracted steel sales prices will come down. In fact, yesterday I had a chat with the management on the call and they gave us guidance on two factors. One was on the outlook on coking coal cost, and the second factor, they gave us the guidance about the European operations for the second half of the year. Let's hear them out.
Most of the coking coal we used was coking coal that we had bought in the previous quarter. So we really did not get any benefit on an average. Of course, the coking coal consumption cost in September was lower than July. But July and August, it was actually moving upwards rather than downwards. So we'll start seeing the benefit in Q3. Europe may be about $100. India would be about $90. The second half for Europe will not be as good as the first half. That is clear. Simply because the rising energy costs would have an impact, though over the last 3 weeks, as you would know, the gas prices have dropped very significantly. So maybe Q4 will not be as bad as we thought it would be. No, not negative. It won't be negative, but let's see where it is.
Okay, let's talk about Axis Bank as well. That's the big Nifty loser. 1.3% equity worth 3,600 crore changed hands early in the morning at an average price of 894. Abhishek joins in with the details.
Well, Axis Bank is under pressure in trade today, given the fact that, there has been block from Bain Capital, which has happened in open market instead of, happening in the block window. So Bain is still left with a 3% stake in the bank. The supply overhang from other large holders like Suti is always there, given the fact that Suti also holds about 1.55% in the bank. Stock has moved over the last 1 month by about 20% in terms of the positive side. There has been few upgrades also coming in from brokerages post the Q2 FY23 numbers that Axis Bank came out, like JP Morgan, who had upgraded the stock to overweight, target price raised to 990 from 780. Valuations, they say, are below peer group, and hence they did recommend the stock. Goldman Sachs also has a buy rating with a target price of 1,053 per share. They say that strong Q2 FY23 with respect to net interest margin aiding to core operating profit beat was seen, and this should drive earnings upgrade as well as re-rating for the stock. Morgan Stanley also has an overweight rating on the stock. Target price has been raised to about 1,150 per share. They say that they expect the stock to re-rate amidst high margins and better operating leverage that is playing out in the balance sheet of Axis Bank. Back to you.
Okay, thanks a lot for that. So just wanted to, get the fine print of Eicher Motors numbers that have hit your screens right now. Now, the commercial vehicle sales has been announced, and in that, the domestic sales are very strong. It's the export sales that have dragged the overall VECV sales under pressure. So total VECV sales are up just 4%, but the domestic business is doing very well. It's a 14.5% growth. On the exports, however, it's a fall of almost 57%, and we do know that export markets are facing a lot of challenges. But this is not a bad set of numbers because the domestic market is where all the growth is at currently. And for the Eicher Motors stock particularly, it's the Royal Enfield sales which have been spectacular over the last many months. Those sales are not out just yet, but overall these numbers are not bad. Single-digit growth for the commercial vehicle business. That's because although domestic has grown 14%, the exports are under pressure, and that's been the case across the board. But Bharat Electronics is higher in trade today on the back of new brokerage calls, Vahishta is here to give us the fine print. Vahishta, over to you.
Thanks for that, Sonia. Well, the street has been quite optimistic on this stock, and also because the results were quite good and broadly in line with the estimates. In fact, the stock has rallied 55% on a year-to-date basis. The Q2 results were out in the past week, and the management is quite confident to meet its 15% revenue growth target for FY23. In fact, also the lower band of the margin guidance has been revised upwards from 21-23% to 22-23% now. And in the long run, this is expected to touch even 24%. The order inflows shall comfortably be met to the upwards of 20,000 crores. Also, Bharat Electronics has recently set up a new plant of lithium-ion cell and battery packs in Pune with a small investment of about 40 crores. Also, the announcement of the fourth positive defense indigenization list includes some 40 items, which provides further revenue growth potential specifically for BEL. Now, there are no delays in receiving payments from the government, which has led to a rise in cash balance for this company. The street is quite confident on the long-term prospects of BEL, which includes its strong order book, its order pipeline, the recent MOU in hydrogen cell fuel cells, also a diversification in the newer business verticals like the hydrogen fuel cells, the greater focus on the export markets. They are expecting $60 million of exports coming in. There is a ramp up of the non-defense business in e-mobility, in metros, in railways and smart cities. In terms of brokerages, Phillip Capital has a buy rating on the stock with a target price of 122 rupees, while Jefferies has a target price of 130 rupees.
Okay, thanks a lot for that. Well, the other stock very quickly that we wanted to address is Madison Sumi Wiring Systems. Remember, it's the demerged entity from the Madison Sumi Systems, the parent company, and it's into the Indian wiring harness space. So the reason why the stock is down almost 6% right now is despite a very strong revenue growth, the margins are under pressure. Now, the company says that they had a big one-time cost because they had to quickly put two new plants on board and on stream rather. And that included a lot of one-time costs, whether it was because of the new program at Bengaluru, a new facility in Chennai, additional costs on freight, extraordinary manpower costs, and supply chain constraints. All of that impacted the margins. The margins fell almost 300 basis points year on year at 10.4%. Now, despite the management saying that these costs will be, will sort of average out over the next few quarters, the street is not impressed. The stock continues to be under pressure purely because the fear is that these additional costs could come up in the next quarter as well. Although the revenue growth is pretty strong for the company, but because they're putting two new plants very quickly on board, they had to incur these additional costs.
And I think there was also that issue about higher minimum wages for south of India, and the company has indicated that they're still in discussions with customers so that they will be able to pass on this increase in costs. Let's slip into a short break on that note. We'll come back and discuss market. Welcome back. Let's take stock of the markets and where we are headed. One view which is emerging is that perhaps the central banks are close to the peak of their hawkishness. So the peak hawkishness may soon be behind us. And that's one of the reasons which has fueled a rally globally. The Dow in the last 2 weeks has seen a rally of close to about 10% in the last few days. We've seen a recovery even in the tech stocks. Now, the Indian markets have been big outperformers even when the global markets were in distress. But if the tide turns globally and things are looking up on the global front, what could the outlook be on the Indian markets? And we've got a pretty good idea of what the earnings season has also been so far. Sunny Agrawal of SBI Securities now joins in to talk about the market fundamentals. Sunny, how would you assess the markets right now? Valuations continue to be at a premium versus emerging markets, but relatively, we continue to be the cleanest shirt in the laundry. Your call on the markets right now, Nifty and the sectoral approach.
Good morning, Rima, and thanks for having me on the show. Markets have, as you have rightly pointed out, that market has rallied a bit away in the month of last month. And at the current level, we are cautiously optimistic, and we would like to approach the market bottoms up, wherein we would like to take a bet on sectors which are reporting a good numbers or a company-specific approach. Case in point, banking sector. Banking sector, a majority of the banks are reporting a very healthy set of numbers with a very good visibility in terms of credit growth as well as NIM growth. So what we have seen is that increase in the deposit rate is lagging behind the increase in rate on advances. So that would lead to the healthy NIM growth going forward. So banking is one of the sector which we like, and we would like to approach this sector based on valuation. So right now, if we see that HDFC Bank is trading at a relatively cheaper valuation as compared to ICICI or for that matter Axis Bank. So HDFC Bank, having earlier traded at 4 price to book, right now is available at 2.5, 2.6 FY24 price to book multiple. So HDFC Bank is one of our top pick as far as banking is concerned. Similarly, on PSU side, Bank of Baroda trading at less than 1 price to book. So we would like to approach the market in a sector specific or stock specific way. So markets are trying to find a value where the valuations trying to identify an idea where valuations are relatively cheap. For example, within FMCG, ITC is the street favorite because of the cheaper valuation as compared to HUL or Nestle. Or for that matter, we have recently seen that Maruti has reported a very good set of numbers with the increase in margin, healthy order book. So within auto, Maruti is one of the favorite pick for us also. Within IT, what we have seen is that KPIT, mid-cap or mid-size companies like KPIT outperforming its large peer set. So KPIT is, and again, the growth outlook, the company has guided for a very healthy growth outlook. So within IT, KPIT is one of the stock we would like to approach. Within consumer space, again, United Spirits, what we have seen is that
Sunny,
the volume growth in a prestige in above.
Sunny, is my voice reaching you? Sorry, sorry to interrupt because you mentioned KPIT Tech, so I just wanted to, delve a little bit on that, right? I mean, if you look at the chart, from the lows in June, KPIT Tech has had a phenomenal recovery. It's up almost 60% from the lows that it hit in June. And then the company also went ahead and raised its organic growth outlook for the full year. Is the risk reward still favorable for names like KPIT?
Sonia, you rightly pointed out that the stock has seen a ferocious rally in the last few days. And right now, the valuations are north of 40x FY24 PE multiple. So, the approach right now, if somebody wants to make a fresh position, KPIT, maybe a buy on dip is the right approach. But ultimately, whenever the markets are in downturn, whenever we get opportunity to enter at a lower price point, so the favorite pick will be the companies where the earning outlook or the growth outlook is very healthy. So from maybe in a short-term perspective, as you have rightly pointed out, the stock has rallied a lot. Maybe a buy on dip is the right strategy for KPIT.
Buy on dips is the right strategy for KPIT. Got that. So, if that dip comes about, right? It's been a one-way rally for the stock in the last 6 months. The other stock that you like, since you said it's a bottom-up stock pickers market, is United Spirits. Now, I just want to understand what the growth trajectory is over there because, demand has come back in a big way. Things have opened up. The hospitality sector has come back. So what kind of growth do you see for United Spirits?
So, United Spirits, basically, we feel there are two or three kinds of trigger. One first trigger is the premiumization. As we have seen that volume, United Spirits has recently hived off its basically a portfolio of 11 to 13 brands to one of the company. And gradually this will lead to the mix shifting in favor of premium products, and that will automatically lead to the increase in margin over the medium to long term perspective. The second trigger which we see in United Spirits is the cooling off in commodity prices. So whether it is a glass prices or packaging material prices, so we feel that going forward, United Spirits will be one of the beneficiary of the cooling off in the commodity prices. And one more trigger which we feel over here is basically the free trade agreement between UK and India, which is likely to happen over next few days or few months. So with the prices coming off due to the reduction in import duty, likely reduction in import duty, so United Spirits can be one of the big beneficiary of all these three factors. And in addition, as we have seen the festive season kicking off, so definitely demand is likely to be good over in the United Spirits. Yeah.
Okay. The other stock that you like is Moltech Packaging. Now, many of these packaging companies actually have come back in a big way. If you look at the last 1 year, Moltech had done nothing, right? It's just starting to move now. It's been in that range of 600 to 700 for the longest time. What do you see as the triggers?
So Moltech is going to have a capex of 250 crore over the gross block of 300 crore. So it's a huge capex. And what we feel that once this capex is implemented, the current capacity of Moltech as of FY22 is around 45,000 metric ton. And we expect this capacity to go up to 54,000 metric ton by FY23. and 70,000 metric ton by first of FY25. So if I take a 80% capacity utilization and on the 70,000 metric ton capacity, and if I take a current realization, I feel the company has got a capability to do a turnover north of 1,200 crore in FY25. And mind you, the current turnover in FY22 was around 630 crore. So we see over the next 3 years, turnover getting doubled. At the same time, being a packaging company, the margins are almost stable. So the agreements in terms of pricing, they usually try to pass on the price with a lag of 1 to 2 months. So margins are quite stable in any packaging company. And at the same time, the company is right now on innovation quotient front. The company is doing a lot of good things. So if you see, they have developed a new product for a DEF, which is the diesel exhaust fluid. They are venturing into the pharma packaging, which is again a very high EBITDA per kg market. So overall, we feel that for Moltec, the earnings may grow from the current 60-70 crore per annum to around 120-130 crore over the next 3 years.
All right. Okay. We will leave it at that, Sunny. Thanks a lot for joining in. That's SBI Securities with all of their top stocks to focus on. By the way, just a word on the market continues to hold very steady now, 18,140 almost, 127 points higher. Just a matter of time before we hit new highs and lots of numbers trickling in. So we'll do one thing. We'll take a quick break. We have some big earnings for the day. So key expectations coming up on the other side of the break. Stay tuned. Back to trading hour. As promised, we have some big numbers coming through today. So Pharma major Sun Pharma is due to report its second quarter earnings, and Ekta's here to give us the key expectations. Ekta, over to you.
Thanks for that. Well, definitely Sun Pharma has a lot of momentum in terms of its stock. So the expectations are high when it comes to its earnings. Revenue is expected to grow over 10% on a year-on-year basis. Margins are expected to probably come in at around 25 to 26%, and a profit decline on a year-on-year basis primarily because of a high base. Now, one of the key factors to watch is that, Taro came out with its numbers, which is basically Sun's US arm, just a couple of days ago, and that disappointed. The revenue was below expectations. The street was anticipating around 160 million. It came in at around $130 million. Adjusted margins was 0%, and there was a loss this quarter as well. So that might weigh in terms of the operating performance when it comes to Sun Pharma. But what might in fact, dispel all of that will be specialty sales from Sun Pharma, which has in fact been showing a lot of momentum. For example, in Q1, the specialty sales were up 29% on a year-on-year basis to around $191 million, which were led by key drugs such as Odomzo, which is a cancer drug, Ilumya, which is a psoriasis drug, Winlevi, which is an acne drug, Sequoia, which is an eye drug. So all of these will probably help in terms of overall momentum for Sun Pharma, and that should trickle down to the margins as well. In terms of the US revenue on a consolidated basis, the street is anticipating maybe around $420 million to $430 million, which would be a growth marginally on a sequential basis. Overall, domestic markets is expected to grow around 14 to 15% on a year-on-year basis. Ex-COVID sales will probably be something that the street would track quite closely.
Thank you very much for that. Let's also get a handle on what Adani Ports might report. Vivek is here to tell us what the street expectations are. Vivek?
That's right. So Adani Ports would be declaring its results, and when you're talking about the numbers, they expect it to be a steady, reasonably strong quarter this time around as far as the company is concerned. Revenues are seen higher by almost 32.5%, coming in at close to 4,680 crore mark. When you're talking about the EBITDA is seen higher by over 23%, coming in at around the 2,790 crore mark. Margins are seen dipping on a year-on-year basis, around 400 basis points contraction could be seen. Profitability is seen higher by almost 60%. Remember, company has made multiple acquisitions, and it will be important to track how is it the company is getting on stream these acquisitions, especially the Gangavaram port. Now, the key highlights when you're talking about the volumes handled on a year-on-year basis, the volumes handled were up almost 15%. However, on a sequential basis, it's down 5%. Company, however, has maintained that the volumes that is being handled is within the annual guided range of 350 to 360 units. Now, when you're talking about the key factors to watch, the volume growth, of course, would be the most important factor, and any commentary regarding acquisitions and how is it that the company is able to onboard these new assets, and also realization trend is something that the street would be keenly anticipating.
Okay. Okay, thanks a lot for that. By the way, those are Varun Beverages numbers, looking pretty good actually. 33% growth on revenues on a year-on-year basis, been a strong growth. And even the operational performance is not bad at all. It's almost a 60% growth on the net profits for Varun Beverages. The stock is reacting to it, up almost about 3% And look at that, a handsome 41% growth in its EBITDA as well. That's a stock to focus on at the moment. But Tech Mahindra will be coming out with its numbers later today. Rima, what's the expectation?
Well, we're looking at a dollar revenue growth of 0.6%, constant currency revenue growth of 2.5%. But growth rate for Tech Mahindra is likely to lag peers. Now, all the other 4 IT companies, TCS, Infy, Wipro, HCL Tech, have already reported their numbers, and on an average, the constant currency revenue growth has been close to about 4%. So Tech Mahindra's 2.5% growth, that's the street expectation, is likely to lag behind peers. One of the reasons could be the rationalization of unprofitable accounts, and that, according to Kotak, is likely to shave off about 100 basis points in terms of growth. Now, EBIT margins are likely to expand by 40 basis points. 11.4% is the expectation. But in Q1, the company had said that Q1 margins were a bottom. And from here, things will improve. So that's the reason why the street is anticipating an improvement in margin. But how much can they improve from here? What's the extent of margin recovery? That's going to be crucial, because the company's guidance is that by Q4, FY23, margins will be 14%. But the street is saying, given the way supply challenges are, it's unlikely they will be able to achieve it. Citi's target is that exit margins will be closer to 12.5%. Profit, according to the poll, should be up 6.7% at about 1,200 crore rupees. What are we going to track? The margin recovery from here on. How are Q3 furloughs? Are they more or less than normal? Is price increase difficult in the current environment? Overall demand environment, so the outlook for FY24 and the CEO change. Well, there's still some time for that, because CP Gurnani's term ends only in December of 2023. But in case they make any new big hires, so just commentary around CEO change is going to be important as well.
Okay, so lots to look forward to as far as Tech Mahindra is concerned. By the way, Varun Beverages now up 4.5%. Post a very good set of numbers reported by the company. Let's do one thing. Let's wind down with trading hour. We have lots more coming up, and the market is in a fine shape. So stay tuned. Halftime report coming up next.